Hi there, Serial Trader here. I want to have a look at the chart here on XLE and present the downside trade setup and trade idea. And I'll just go through this chart here first. And we're looking at the daily chart of XLE. So I'll start off with just the basic classical chart pattern that we do have a head and shoulders top looking pretty clear here. We got the left shoulder, head, the right shoulder. I actually like that the right shoulder is weaker, clearly, than the left shoulder. That adds a little bit of confidence, in my opinion, to a head and shoulder topping pattern and then reversal. But then more importantly, for me at least, we do have a very clear Elliott wave pattern to the downside in development, and just a simple 1, 2, 3, 4, 5 down for either an A or a 1. And looks like we're doing our ABC up for either a B or a 2. Not sure if the C wave is actually done here or not yet. It could be. But you certainly have to entertain the possibility that this can still go a little farther. Although I like that we're getting back up into this previous fourth wave area, which whether you're in an uptrending market or a downtrending market, a pullback to the prior fourth wave is quite a common target when you're either correcting up or correcting down, depending on the trend. In this case, we're correcting up after doing 5 down. So I'm thinking we got some decent downside potential here. And just to make a couple of assumptions, and let's just assume that we're completed here with our ABC up for either the B or 2. So under that assumption, we'll just take the length of the A or 1, project it off of the B or 2, and we'll come up with a couple levels here. So if this is just going to be an ABC down, we'd only be looking for between the 618 relationship of A versus C to potentially the equality relationship of A versus C. So 618 would get us to 43 roughly, and the equality will get us, as it's currently measured, to just under 39. So there's some numbers to deal with or work with here. And then, of course, expecting whenever we're done our correction up here, if we're not already done, expecting a 5-wave move down after the initial 5. So we're looking for a 5, 3, 5, right? So given that, let's go over to the Thinkorswim candlestick chart and actually look at potential option position that could be taken. Now, I'll also mention just you can see the 50-day simple moving average looks like it's on its way to cross down below the 200-day, so that could be a potential death cross setup as well if you like using that 50-200 kind of system. To me, it's just a complementary thing. The initial analysis was more important, but certainly nice to see kind of moving average action pointing in the same kind of mode, right? Okay, what I actually want to go to here was the option chain on XLE. Now, I find that XLE often has very reasonably priced options for how much it can move once it actually gets going, meaning that they're cheaper than they probably ought to be for how the thing can move, in my opinion, which is good. Can make for good positions. Okay, so a couple ways to do. Now, I'm looking at December as far as expiration goes, and no magic to that. I mean, basically, if we just take the amount of time that we spent in this initial move down, and if we just make the assumption that we're done our little correction up and kind of project that out, just eyeballing it, that brings us roughly to December. Okay, so I think that would provide enough time for the move down to play out if it's going to. Hence the decision of the December expiration here. Now, I mean, there's a few ways you can do this. So right now we're sitting under 50, 49.69 as of today's close. So you could go, roughly near the money or maybe slightly in the money put, and basically just have a kind of pseudo short position by doing that, obviously with limited risk, unlike a short position. I mean, okay, if you bought the 50 strike for 3 and change, and we get down to 40, well, let's see our other target. Well, actually, I can just do the same thing I did on the other chart there. And let's just project the 618 and equality. Just for some numbers to work with here. So, okay, 43 to 38.79. We'll call those a couple numbers to work with as far as targets, at least initially. I mean, if it could certainly go lower if we're doing something more bearish, but for now, let's just treat this as a potential pullback ABC kind of zigzag scenario. Okay, so if you were to buy the 50 strike put for, let's just say, somewhere in the threes, and we go down to 43, well, that'd be probably about a double, about 100% gain on the contract. And if we go down to 38, it would certainly be more. That's just kind of a basic way of playing it with an option. I think this could be potentially a nice spread trade. And let's see here. I would say maybe pick the low of our current range for the long strike, and that'd be let's just say 45, right around 45. And how many point spread do we want to do? I mean, we could do a 5-point spread. Yeah, that's probably okay. So you'd buy the vertical. You'd buy the 45 and sell the 40. Okay. And it would be current debit. I mean, these aren't live prices as the markets are closed, but right now, let's just say it's under $1. Okay. So under $1 for a $5 spread. So you got potential for a, well, let me just show you the theoretical situation here. And let's shrink this down a bit. So on 10 contracts, I mean, you can just do one contract for a spread if you want. Let's just work with that number, and obviously it scales up as you increase it. But so for a one contract, 45-40 put spread, vertical put debit spread, $87 would be the maximum risk, and $413 would be the maximum reward if you expired at or below 40 on that December expiration. And obviously you can see how it would move until then, at least an approximation of that with this risk profile tool. So that's pretty good. I mean, you're looking at a well, better than 4-to-1 risk to reward ratio, just theoretically on the actual option contract. So I think this might be a decent way to play it, because I mean, as good of a setup as it looks like, we certainly know that bullish surprises seem to come out of nowhere in today's markets. Even when there's a nice downside trade setup, it can certainly fail more than it probably should normally. So that'd be a good way of just kind of limiting the position size while still allowing for a nice gain if it actually comes to fruition. Just a 45-40 debit spread. Now, I mean, there's other positions you could put on, of course, but pretty basic. And just thought I'd offer it out there because it is fairly difficult to find good-looking downside trade setups, but this certainly caught my eye recently, so I figured I'd share it. Okay. Now, if I just go back to the XLE chart here, if we look at a little bigger picture, if I zoom out, let me just clean this up for now, since I've already shown my my take there on the daily. So since our we'll call it the COVID low, the March 2020 low, we've definitely had a sizable recovery on XLE, but we really only got back to pretty much where we fell apart before the quote unquote pandemic started. Okay, this was late January of 2020, and then you can see we filled this gap on the weekly chart, and that's basically all we did, and then we just backed right off from there. So to me, I'm not that convinced that we're really starting a new energy bull market just yet. It's possible. I mean, this is either an ABC up and we're just heading down again, which certainly possible, or we've got a 1-2 and then maybe another 1, and we're working in ABC2 for a larger bullish pattern to come. Either way, we're looking for a leg down here after doing this 5 waves from the top and recovering in 3 waves. So to me, that bigger picture, interesting to think about, but not that relevant to this trade. Whether this is just going to be a C wave of a pullback within a still developing bullish trend, or if this is going to be something more menacing to the downside, which I think might correlate if we actually got like a real market, you know, significant correction or crash or what have you. Either way, it doesn't really change the premise for this trade to be looking for a move down below 45 or so. Okay. Anyway, just caught my eye there on XLE. Do what you will with it, but I felt it was worth sharing, so there you go. Serial Trader signing off.